How's it going, guys? Limelight Capital here, back for another video. So today's going to be another Reddit DD post. This is a post from Criand, switching it up a little bit. I think that's how you say his name, Criand. I'm not sure. Um, but yeah, guys, please leave a like on the video. Please leave your thoughts on this post down in the comments below. Definitely subscribe if you're not already, and let's just jump into it. So the title of this post is "Things are shockingly similar to the February 24th and March 10th run-up so far. Gamma squeeze indicators from the previous T plus 21 / T plus 35 have returned. Their doom approaches." Preface: I am not a financial advisor. I do not provide financial advice. Da 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 da. TLDR: hedgies are so close to meeting their doom. Doom. Here's a picture of Invader Zim here, which is a good throwback. So the actual TLDR, June 1st has kicked off with the GTC, ICC, and the OCC auction and wind down plans officially being in place. This means that it is okay to launch the rocket because those three entities are now protected. We're seeing very similar price movements in gamma squeeze signals compared to previous T plus 35 / T plus 21 run-ups that occurred from February 24th to March 10th. This means that we could very well see another gamma squeeze of similar or greater magnitude, which would begin to go parabolic around June 9th. Note, this does not mean that the gamma squeeze will be coming. This is data supporting it. Da da da. Okay. So part one here, it's titled "June kicked off a few things." Here's a list of things you might have missed, save for OCC 0-003, that are now in place as of June 1st, which further supports that the mother of all short squeezes is getting close. JP Morgan opened more netting accounts. These are piggy banks for sucking up assets of defaulting members in the auctions of the DTC, ICC, and the OCC. I wonder who JP Morgan is going to consume. DTC, ICC, and OCC wind down and auction plans now in place. OCC 0-003 was the final one to join. Welcome, OCC. All three entities are finally ready for the bomb. In my opinion, this means that the rocket is ready for takeoff because these entities are now protected. ICC index swaption discounts started through ICC 014. Think of all this as an index like the SPY, QQQ, the VIX, etc., that watches for the potential defaults of others in the financial world. The base swaptions are just like options. They give you the right but not the obligation to buy or sell insurance. But this rule is for the index accounts, meaning it's a bundle of these swaptions among a bunch of entities. The ICC must be preparing for members of the index to be going to the brink of defaulting or defaulting. From my interpretation, these discounts give others a cheaper hedge against defaults and potentially get to scrape by instead of going under. This won't save the guys who are in too deep. It just helps everyone else to remain afloat after this market bomb goes off. Trading halt rule amendments that were passed May 28th and are therefore in effect as of June 1st. The wording of these amendments are very interesting, and the timing is very interesting. Take a look. They will allow halts in the event of a series of quotes, orders, or transactions at prices substantially unrelated to the current market for the security or securities. They are preparing for people to be placing sell orders on securities / stocks that are way far away from the current trading price. Sound familiar? Like if Gamestop is trading at 260 and a sell order comes in for 100,000, 500,000, a million, 10 million, etc. Yeah, very curious why they pushed this amendment out. Edit: this is most likely to have a slow burn upward in price on the standard plus minus 10% within 5 minutes trading halt. Don't worry about what has yet to happen, only time will tell how this plays out. Part 2, similarities to the previous T21, T35 run-up. It's quite amazing to look at everything right now and see the similarities. We already know that the T plus 21 loop is confirmed. It's like poetry. GameStop hits a beat in a cyclical manner every 21 trading days, and it is evidence that shorters are stuck in the endless dance. Can we really look at T plus 21 and think that they have covered their short positions? If we can see patterns emerge from T plus 21, then we can most likely see patterns emerge from T plus 21 and T plus 35. And so far, the current T21, T35 looks shockingly similar to the previous. One similarity is the resurgence of the gamma squeeze signals. The amazing ape username Yelia2 and I'm sure many others have been identifying signs that a gamma squeeze could be coming. So there is a chart here which it shows it's just the Gamestop chart, and it shows gamma neutral spikes, then returns to norm. About a week later, it spikes again, initiating the gamma squeeze March 8th to March 10th. And it's the chart is gamma neutral values. Sorry. The most important data point to keep an eye on here is that the yellow that spikes up and down. This is the gamma neutral value. The gamma neutral price is the underlying price that creates a total market gamma of 0 across all GME options. It is often associated with high volatility and sometimes, especially in GameStop's case, it's associated with gamma squeezes. In other words, if you see gamma neutral spike up to the thousands and GameStop is currently trading in the hundreds, that means a gamma squeeze could be coming. Because the price needs to shift up to that amount in order to return gamma to 0 for a low risk hedge, I definitely recommend reading their work on their findings. You'll see that in the first purple circle of figure 1, gamma neutral spikes up on the 24th of February. Gamma neutral then slams back down a few days later because the pressure was killed off. About a week later, March 5th, gamma neutral spikes again and remains high until the flash crash of March 10th. Up until the flash crash, GameStop went on an absolute run in price and was starting to go parabolic. Take a look at the second purple circle, figure 1. The same spike up and down over the course of a few days occurred again starting May 25th. Oddly similar to February 24th spike up and down, right? Both brief anomalies initiated on T plus 21 dates. Between March 10th and May 25th, gamma neutral hasn't spiked up at all, despite there being 2 additional T plus 21 cycles in between on March 25th and April 26th. What could have changed this time on May 25th? Enter T plus 21 and T plus 35. The mechanics aren't fully fleshed out as for why T plus 35 happens. I mean, it's all based on patterns we see, but T plus 35 most likely applies to net capital. Net capital being that the shorters must adjust their short position debts after a time frame of their debts being discovered or risk going net negative. This must be done in order to not default, because going net negative would trigger a margin call. These T plus 35s initiate from 3 major option dates: January 15th, 2021, April 16th, and July 16th. So we're not looking at purely T plus 21 days, but a wombo combo of T plus 35 and T plus 21, which could very well be the same reason gamma squeeze signals are flashing again. Per my theory, T35, T21 occurred last week, May 25th, due to the April 16th option expirations, and the previous T35, T21 occurred on February 24th. Cool, so it appears that T21, T35 cycles can cause gamma squeezes due to extra pressure on the shorters, and that might be why we're seeing a resurgence of the gamma neutral squeeze indicator this cycle. Oof, not a lot of data points, but hey, I like the patterns. Moving forward, let's take a look at price movements over the last few days. Of note, the purple callout boxes are pointing to T21, T35 cycles. The red callout boxes are pointing to T21 cycles. So there's a chart here, is the GameStop chart, and they just break down the T plus 21 and T plus 35 cycles here. Starting back in February 24th all the way to the left of figure 2, you'll see the purple callout box, which is here, pointing to around the actual price of GameStop. The lower bound of the box starts at the close price of February 24th, and the upper bound of the box ends at the close price of March 2nd. So that's from here to here. Which is 4 trading days later. I use 4 trading days because, well, that's how many days we have seen since May 25th so far. I've applied the same method to all the T21 dates and plotted their respective boxes. This is a visual to show you the behavior of the price following T21 and T21-35 cycles and the differences between the two. You'll notice how on the T21 days between February 24th and May 25th, the red callouts, which are here, that the price was anchored around the same closing price of T21 and not much upward pressure was applied. Meanwhile, the purple callouts have had breakaways from these prices and are gaining much more momentum. The prices following T21, T35 have much more support and are doing that beautiful bull flag pattern that TA apes love, further supporting that we're in a potential run up to a gamma squeeze in the near future. Can't stop, won't stop, GameStop. The similarities of the price movement so far are quite high because this is on top of the resurgence of the gamma squeeze indicators. With all of the DTC, ICC, and OCC auctions and wind down plans being in effect, as well as other items I identified in Section 1, man, it seems too good to be true. For fun, I plotted in blue 10 bars and the gamma ramp timeframes in Figure 2. Check out what the next parabolic move like March 10th could occur. June frickin' 9th. Sound familiar? Shareholder meeting. It's probably just a coincidence, but damn, good timing. Also 6-9. Nice. Further possible support is this post by the amazing ape username Isness. They have identified that a breakout could be coming on June 10th. They've used a really clever approach to guesstimate the breakout. Definitely take a look. Confirmation bias overloaded once I saw this. Again, guys, I will link this post down below if you guys want to check any of these links out. One last thing to note before moving on is the number of consecutive green close days that have followed May 25th. We have not seen that before when there's a ton of support following T21 or T2135, even back for the February 24th cycle. Are shorties losing their grip? One metric I was watching for the longest time was deep in the money call out purchases, which could also signal that their doom is near. The death of deep in the money calls. In my previous post, I was thinking that these deep in the money calls were being used to satisfy FTDs. Now, I'm not entirely sure. It could be used for that purpose, certainly, but it could simply be that they were used to delay the FTDs rather than satisfying them, as people were predicting for the longest time. If that is the case, then the shorties are most likely losing their grip, as shown by the increase of volumes in meme stocks across the board. The shit is about to hit the fan. I'm grabbing this figure from Broca's username Broca's post, the naked shorting scam, which compares deep in the money calls which compares deep in the money call volumes to FTDs. Sorry. So there's a chart here which it's titled Suspicious Deep in the Money Call Volumes and FTDs in 2021, and it goes from January up until the beginning of May. So when FTDs skyrocket, deep in the money calls are eaten up. You can see this occur extensively in January due to the mini squeeze that occurred from massive FOMO of retail around the world. And then the resurgence of these deep in the money anomalies in February to March, February 24th to March 10th run up due to more FTDs appearing. Ever since March 10th, these deep in the money call purchases have slowly decayed and died off. User Dan Brent has been posting about these anomalies for weeks and weeks until suddenly the anomalies have stopped. The only significant purchases that have been made since the deep in the money calls died off have been for deep out the money calls and deep in the money puts. Deep out the money calls were purchased, possibly a big entity expecting the price to pop by July 16th. Deep in the money puts were purchased as well. We got a warning that they could be used to do a flash crash on the price on May 28th, and sure enough, it happened. So what does this mean? The give up on deep in the money calls could be many things. Perhaps there's no more liquidity to use them. Maybe they came up with a better way to delay FTDs. It could be too expensive and they can't delay FTDs anymore. Maybe, by some weird reason, DTC-005 is actually in effect in blocking this practice, which makes the FTDs come to fruition these next few weeks. The resurgence in meme stocks across the board makes it look like they're losing their grip, and it's simply too expensive for them to delay it anymore. The volume, in my eyes, is not shorts covering, but the volume is due to the FTDs beginning to pour out into the world. The peddling of AMC could be that it is their last and only option, to divide and conquer. Their best chance now is to try and pull Gamestop apes into AMC because, despite it being shorted heavily as well, it is a much higher float and lower price. Therefore, it would be easier to contain and take control of. They have to try to push AMC because all their other efforts failed. That being said, when GameStop goes off, AMC, costs, and other meme stocks will most likely squeeze as well. But GameStop is the backbone, and only as long as GameStop remains strong will every stock experience a squeeze. The latest T21, T35 cycle is prepping a gamma squeeze, just like what we saw from February 24th to March 10th. It's surprising how similar things are looking so far, especially in the price movement, and support staying in the 260s as of after hours of June 1st. It's even scarier that the gamma squeeze, if it happens, would start to go parabolic exactly on June 9th. Ryan Cohen, did you know? Did you? So yeah, guys, very interesting post here. I do like pretty much all posts that I still don't know I don't know if it's Criand or Criand. I do apologize to him or her. But yeah, guys, very interesting post here. I really truly do believe that the end is near for the hedge funds. Whoever it is, it doesn't even have to be hedge funds. Whoever's on the other side, whoever is naked short selling, whoever is abusively naked short selling and ruining the free market, that's who we're against. And yeah, guys, I do believe their time is near. Tomorrow, as of recording this, it's technically June 9th. It's 1:30 in the morning on the night of June 8th, going into June 9th. And I'm thinking that tomorrow and the rest of the week is going to be huge. I could be wrong. Again, I'm not a financial advisor. Take everything I say with a grain of salt. But posts like this, they definitely fill my confirmation bias meter. Just clear, concise, to the point, DD that breaks it down and shows the data as to why the naked short sellers are screwed. So yeah, guys. Again, please leave your thoughts on this down in the comments below. Subscribe and like the video if you haven't done that already. Again, guys, I do not do this for profit. The channel is not monetized. I do this to help a fellow ape. So please, leave some support on the video. And again, I'll catch you in the next one, guys. Thank you and enjoy the rest of your day. I'll see you on the moon.